Good day, Ghana. It is the 3rd of June 2025. For many months, even years, we have talked about the Cedi. Often, the news has been about its struggles. It has often weakened against major world currencies. This situation has made life difficult for many. Prices of imported goods have gone up. Planning for businesses and families has been tough. Many have felt the pinch in their daily lives, watching their purchasing power shrink. This has been a consistent worry. But lately, something has changed. The narrative is shifting. The Ghana Cedi is showing surprising strength. It is gaining ground against the US dollar. It is also performing better against other big currencies. This is not the story we have been used to hearing. This change has caught many by surprise. Some are hopeful, while others remain cautious. What is happening with our currency? This is a question on many minds across the nation today. This strengthening is indeed surprising, especially when we consider the recent past. Global economic conditions have been challenging for many developing economies. Ghana has certainly faced its share of these hurdles. So to see the Cedi make a comeback now is quite remarkable. It prompts us to ask serious questions. Why is this happening? And importantly, what does it mean for all of us? Is this a temporary blip or the start of a sustained recovery? Understanding this turnaround is crucial. It is not just about numbers on a currency exchange board. It is about the real-world impact on your finances. It affects the price of kinky and the cost of fuel. It influences business decisions and investment prospects. Therefore, we must delve deeper into this phenomenon. We need to explore the reasons behind this newfound strength. We must also consider if this positive trend can last. Let us explore this together. One of the biggest reasons for the Cedi's recent good fortune is simple. More foreign currency, especially US dollars, is coming into Ghana. Think of it like a market. When there is a lot of something, its price tends to go down. When there is less of it, its price goes up. For currencies, it is similar. An increased supply of dollars means the Cedi has less pressure on it. This helps our Cedi to become stronger. Where are these dollars coming from, you might ask? Several sources contribute to this inflow. Foreign investments could be on the rise. Perhaps international businesses see new opportunities in Ghana. They bring in dollars to fund their projects. Remittances from Ghanaians living abroad also play a vital role. When our brothers and sisters overseas send money home, it boosts our foreign currency reserves. These flows are very important for our economy. Additionally, loan disbursements from international partners can increase dollar supply. Sometimes these are project loans. Other times, they are for budget support. When these funds arrive, they directly increase the amount of foreign currency in the country. This helps to stabilize and strengthen the Cedi. The timing of these inflows can have a significant impact. A large inflow can quickly change market sentiment. This is what we might be seeing now. So, an increased supply of foreign exchange is a primary factor. It directly eases the demand pressure on the Cedi. This allows our currency to appreciate against others. However, it is important to know if these inflows are stable. Are they one-off payments or a steady stream? This will determine if the Cedi's strength from this source will last. We must look at the nature of these financial arrivals. This helps us understand the bigger picture. Another significant factor is the support from international financial institutions. The International Monetary Fund, or IMF, is a key player here. When Ghana secures a program or receives disbursements from the IMF, it sends a strong signal. It signals to the global market that Ghana is committed to economic reforms. This can boost investor confidence significantly. This confidence itself can attract more foreign currency. The funds from the IMF directly add to our foreign reserves. This provides a buffer for the Cedi. It gives the Bank of Ghana more firepower. They can use these reserves to manage volatility in the currency market. So IMF support is not just about the money. It is also about the credibility it lends to our economic management. This has been a critical piece of the puzzle recently. It has helped to calm nerves and provide stability. Beyond institutional support, Ghana's key commodities are doing well. Cocoa and gold are our major exports. When prices for these commodities are high on the world market, Ghana earns more dollars. Higher gold prices mean more export revenue. Similarly, a good cocoa season with favorable international prices brings in substantial foreign exchange. This has been a welcome development for our economy. These earnings directly bolster the Cedi. These commodity price booms are a blessing. They provide a natural inflow of foreign currency. This reduces our reliance on borrowing or aid alone. However, commodity prices can be very volatile. They can go up, but they can also come down sharply. Relying too much on high commodity prices can be risky. We must remember this when we assess the Cedi's current strength. Are these prices sustainable in the long run? This is a critical consideration. The Bank of Ghana, our central bank, has also played a crucial role. They have been implementing stricter monetary policies. This means they are working to control the amount of money circulating in the economy. One way they do this is by adjusting interest rates. Higher interest rates can make holding Cedi assets more attractive. This can increase demand for the Cedi, thereby strengthening it. It also helps to curb inflation. The Bank of Ghana is also working to manage the forex market better. They have introduced measures to ensure more transparency. They are also clamping down on illegal forex market activities. These actions help to reduce speculative trading against the Cedi. When the market is more orderly and predictable, it builds confidence. This means fewer people are rushing to buy dollars out of fear. This helps to stabilize our currency. Improved regulatory oversight is key. The central bank's efforts to streamline Forex Bureau operations are important. They ensure that transactions are properly documented. This helps to track the flow of foreign currency. It also makes it harder for illicit funds to distort the market. A well-regulated market is a more stable market. This stability is essential for the Cedi's health. It encourages legitimate transactions and discourages hoarding. Finally, the general mood or public sentiment matters. When people believe the Cedi will be stable or get stronger, they act accordingly. If businesses and individuals are confident, they are less likely to panic buy dollars. The Bank of Ghana's consistent communication and decisive actions can influence this sentiment positively. This positive feedback loop can contribute to the Cedi's appreciation. Confidence is a powerful, though intangible, economic force. It is a crucial ingredient. So, the Cedi is stronger. What does this mean for the ordinary Ghanaian? Well, one of the most immediate effects is on imported goods. Ghana imports many essential items. These include food items like rice and cooking oil. We also import fuel, electronics, and clothing. When the Cedi is strong, it costs fewer Cedis to buy these goods from other countries. This should mean cheaper prices in our markets and shops. Think about fuel prices, for instance. Ghana imports crude oil and refined petroleum products. These are priced in dollars. A stronger Cedi means the cost of importing fuel in Cedi terms goes down. This can lead to lower prices at the pump. Cheaper fuel has a ripple effect. It reduces transport costs for goods and people. This can help to lower the prices of other things too. This is a direct benefit many can feel. A stronger Cedi can also boost confidence in the local currency. When people see the Cedi gaining value, they may be more willing to save in Cedis. They might feel less need to convert their savings into dollars. This increased confidence is good for the overall economy. It can encourage local investment. It makes financial planning a bit easier for families and businesses. This stability is a welcome relief for many. Moreover, for those who pay for services priced in foreign currency, life becomes easier. This could be school fees for children studying abroad. It could be subscriptions for international software or services. A stronger Cedi reduces the local currency cost of these payments. This provides some breathing room for households and businesses. These are tangible benefits. They show how currency movements directly touch our lives. However, a stronger Cedi is not good news for everyone. Ghanaian exporters might face challenges. Exporters sell their goods in foreign markets and earn foreign currency. When they convert these earnings back into Cedis, a stronger Cedi means they get fewer Cedis for their dollars or euros. This can reduce their profits. It might make Ghanaian exports more expensive for foreign buyers. This could hurt our export industries. Consider our farmers who export cocoa, cashews, or pineapples. They work hard to produce quality goods for the international market. If the Cedi becomes too strong, too quickly, their income in Cedi terms could fall. This can affect their livelihoods and their ability to reinvest in their farms. It might make them less competitive compared to farmers in other countries. This is a serious concern for our agricultural sector, a backbone of our economy. Rural communities, often heavily reliant on agriculture, might feel this pinch. If export earnings for agricultural products decline, it impacts the entire local economy in these areas. There might be less money circulating. This can affect small businesses and service providers in these communities. So, while urban consumers might enjoy cheaper imports, rural producers could face difficulties. This creates a disparity that policymakers must watch carefully. Furthermore, a very strong cedi might discourage remittances in the long run. If Ghanaians abroad feel they get too few cedis for their hard-earned foreign currency, they might send less, or they might look for alternative ways to support their families back home. Remittances are a crucial source of income for many families. They also provide vital foreign exchange for the country. A significant drop would be problematic. This delicate balance needs careful management. Now the big question, can the cedi's current strength last? This depends heavily on the reasons behind it. If the appreciation is due to sustainable improvements in our economy, then yes, it can last. But if it is based on temporary factors or borrowed funds, then we must be cautious. It is like building a house. A strong foundation is needed for it to stand firm through storms. Is our cedi's foundation strong enough? One major risk is our national debt. If a significant portion of the dollar inflows is from new loans, this adds to our debt burden. While loans can provide temporary relief, they must be repaid with interest. If the borrowed funds are not invested wisely to generate future income, repaying them will be a challenge. This could put pressure back on the cedi in the future. Relying heavily on external support, like IMF programs, also has its limits. The reliance on commodity prices is another risk. As we discussed, cocoa and gold prices can be very unpredictable. If these prices fall, our export earnings will decrease. This would reduce the supply of dollars and put pressure on the cedi. We cannot control global commodity markets. Therefore, basing our currency stability solely on high commodity prices is not a sustainable long-term strategy. We need a more diversified economic base. So, while we enjoy the current strength, we must be realistic. We need to assess if the fundamental drivers of our economy are improving. Are we producing more goods and services for export? Are we attracting long-term foreign direct investment, not just short-term flows? Is inflation truly under control? These are the deeper questions we must answer. Without strong fundamentals, the cedi's strength might be a temporary illusion. This is a critical point to ponder. If the cedi's strength is not rooted in real economic growth, it can create problems. An artificially strong cedi can harm our export sector significantly. Local industries might struggle to compete with cheaper imports. This could lead to job losses. Businesses might find it difficult to sell Ghanaian-made products abroad. Over time, this can shrink our manufacturing and agricultural sectors. This is not healthy for long-term development. An overvalued currency can also discourage foreign investment in productive sectors. While it might attract short-term hot money seeking quick gains, long-term investors look for real value. They look for a competitive environment. If our cedi makes production costs too high in Ghana, they might invest elsewhere. This would mean fewer jobs and slower economic growth for us. We need investment that builds lasting capacity. There is also the risk of reduced remittances. If the official exchange rate is perceived as unfair or too strong, people might use informal channels. This means less foreign currency flows through the official banking system. This reduces the central bank's ability to manage the currency effectively. It can also lead to a widening gap between official and unofficial exchange rates. This creates instability and uncertainty in the market. Perhaps the most dangerous risk is a sudden, sharp depreciation later. If the factors propping up the cedi are temporary, their reversal can cause a crash. This could happen if commodity prices fall suddenly, or if investor sentiment changes quickly. Such a shock would be very damaging. It would erode confidence, fuel inflation, and create economic chaos. We have seen this happen before. It is a scenario we must strive to avoid at all costs. Ultimately, true economic strength comes from solid foundations. It is not just about having a strong currency for a short period. A strong currency should be a reflection of a productive and resilient economy. It should reflect an economy that creates jobs. It should reflect an economy that innovates. It should reflect an economy that can pay its own way in the world. This is the goal we should aim for. So what should our leaders do? The government and the Bank of Ghana have a crucial role. They need to ensure that exchange rate policies support overall economic stability. This means avoiding an overvalued cedi that hurts exporters. It also means preventing excessive volatility. A predictable exchange rate is good for business. It allows for better planning and investment decisions. This is a delicate balancing act. Managing prices effectively is also important. While a stronger cedi can lower import costs, we need to ensure these benefits reach consumers. Authorities must monitor pricing practices. They should address any anti-competitive behavior. Furthermore, policies should support local production. This will reduce our reliance on imports in the long run. Growing what we eat and making what we use is key. This creates sustainable economic value. Finally, clear and transparent communication is vital. The Bank of Ghana should continue to explain its policies to the public. People need to understand the reasons behind currency movements. This builds trust and manages expectations. For the government, the focus must be on long-term structural reforms. We need to diversify our economy. We need to improve the business environment. We need to invest in education and skills. These are the paths to lasting prosperity for all Ghanaians. This is how we build a Cedi that is strong, because Ghana is strong.